the lines, the vertical lines, which like the first 1 minute we went up, another up, another up, and then it spiked up. This should be something like this. This should be something like this. This is the opening price. This is the opening price here. This is where the 1 minute opened, and then this is the highest it has gone. So now you see that what we are explaining as the candles moving up for 5 minutes is actually one big candle which is pointing downwards on the 5 minute chart. So what this means is that whatever you're trading, if you're looking at 5 minute chart or 5 minute chart, just know that that 5 minutes is a summation of what has been happening in each individual minute. So they basically take 1 minute, another minute, another minute, another minute, another minute, and then add it up, then give us the results on one side. So any time frame higher than the previous one is actually a summation of the previous less number of funds. So if we have 15, that 15 is a summation of what has been happening in each individual minute up to the 15th minute. So they'll basically count the opening of that 15 minute, write it somewhere, and then they close another 5 minutes, they close everything, and then after the 15 minutes the result is given out and it has drawn a candle that looks like this. So this is now a pin bar. The same thing of the past 3 weeks, 4 weeks, and that means they have taken what has been happening for the past 30 days. If that month is now the monthly candle, it's that simple. That's how time frames you'll find this. That's how they relate. Anytime you have a monthly chart, just know that they've taken what has been happening for the past 3 weeks, 4 weeks, and that means they have taken what has been happening for the past 30 days, if that month is 30 days. So that's how we come up with time frames. That's how this is coming about. And then for this one, there's one thing which I need to mention. If you look at my screen, you'll notice that there are period separators. These are period separators. I'll delete all this first. We have the lines, the vertical lines which you're seeing, these ones, this one, and this one, they're called period separators. What they stand for is they divide a particular duration of time. So if you're looking at monthly chart, like this is a monthly chart, from this point, every in between, from this one up to this one, this stands for a year. This one up to this point, this stands for another year. This one up to this one stands for a year. So if you are looking at the monthly chart, you want to know what has been happening the entire last year. This is what has happened. The price actually went downwards. This is how you can know clearly what has been happening. So averagely, we saw that the price opened somewhere here, it went down, and it came and closed above, which means the previous year, 2018, gold actually closed as a pin bar to the upper side, because we opened here and then we went down up to some point here, and then we came and closed somewhere here. To represent this in a yearly candle, it will look like this. It's actually a green candle. This is what you'll have. This is the opening price there, and then this is the highest price we reached, and then this is the lowest price that we reached, and then this is the closing price. Okay, the closing price should be here if I'm not wrong. This is how the candle looks. So we have that. If you had to represent last year in form of a candle, then this is what you had on your screen, and then there's a big tail there. Have that. This should be green candle, and then we have the top tail touching the upper trend line, and then you have the lower tail touching 116.43. So if you have to represent whatever happened the entire last year, then you'll have something like this. This is like a pin bar. This is like a bullish pin bar, and it means that this coming year, which is now 2019, we still expect price to proceed even higher. So this is how time frames work. You can represent exactly what has been happening in a year. You don't have the MT4 we are having does not draw this for you. It does not have the one for yearly, but you can understand just by looking at what has been happening on the monthly. So this is like January, this is February, March, April, May, June, July, August, September, October, November, December. Then this is January 2019, February, March, April, May, June, July, where we are now. So this one is likely going to close as one big candle pointing upwards, and it's merely a continuation of what has been happening the previous month, the previous year. So this is what happened overall. And if you are looking at the weekly chart, then you'll have something like this. You'll have something like this. Delete all this, we don't use them. This is weekly chart. So weekly chart also shows you, sometimes it shows you what has been happening every year. So this is exactly what happened last year. We opened here and then we closed the year here. This is beginning January 2018 and then December 2018. This is how it closed. So overall, this also, I think, sorry, we made a mistake here. This should be red because it opened here and closed below. This is a bullish pin bar, but it's red in color. Sorry, I'm sorry for that. We have a bullish pin bar, but it's somehow red in appearance. This one. The same thing if you trace it on the yearly, weekly. This is what you have. The price opened here. This is January 2019. February it went up, came down, and came someone close somewhere here. So if you are to represent this, whatever happened last year in one big candle, you'd still come up with the same thing which I've drawn on the other time frame. This is how it looks. We have price opening here. This is the opening of January 2018, and then the closing price is here. So and then we have the highest here, and then the lowest in 2018 is here. So if you want to draw this in form of a candle, this is what you have. You will have a red candle still. It opened up, but then it closed below. That's what makes it red. We'll remove this. Then we draw one straight line from the bottom up to the upper line. So if you're looking at the weekly, assuming you are trying to understand what has been happening on the yearly basis from what is happening on the weekly, then this is what you had on your screen. It's pretty much the same as what we are looking at when we are looking at the weekly chart. On the monthly chart, we'll have something like this. So this is still a pin bar, it points upwards, and if somebody was understanding the charts from this point of view, you actually knew that somehow we are supposed to head to the upper side. And the moment that the price broke above the closing price, the previous year's opening price, which is here, you actually knew was supposed to head upwards. And that opening price was this one. That day that price went above it, a retracement back to the same place meant that we're looking for a buy. So we are still upwards on this one. This is another way to understand it. Just if you wanted to illustrate this in terms of what is happening on the weekly to understand yearly, then you could have come up with a candle like this. This is what has been happening. This is what happened the previous year. The entire thing, we had the lowest low, which is here. This is the lowest low, and then we had the highest high, and then we had the opening price, and then there's the closing price. So the same thing if I'm looking at the daily. If today you're looking at the daily, then this is the information you're actually having. Daily tells you what has been happening in the entire month. Just a second, we'll delete this first. If you're looking at the daily, then this is what you have. You have the spin bar, there's this. The entire place from this point up to this candle, this is what happened in the entire last month. In June, we actually had price rising, and then this month here, there was consolidation, and then there's another month where there's consolidation, there's another month where there's consolidation, and then there's another month where there's consolidation. So you can illustrate this, you can basically draw a candle that explains what has been happening in the last 3 months, 6 months, 7 months. You don't, the MT4 does not give those ones, but you as a trader needs to know exactly how to come about those ones. You can basically do it the same way I've done for this one. Like if I want to explain what happened last month in one big candle, assuming I didn't have the monthly chart, or I want to explain what has been happening in the past 2 months in form of one candle, then this is what I will have. I would have, the first thing, you have to know the opening price of the previous, on the last 2 months. That is in May, what was the opening price? It was here. We actually opened here, and then last month we closed here. The highest price that we've seen so far is this one, and then the lowest price that we've seen so far is this one. So that was in May. The price was around 1265.93, and what this means that we actually closed above. So the candle is one green candle here, one green candle. So anytime, if you can draw, if you can explain your charts like this, you'll be able to know exactly whether we've been rising or we've been dropping, or you should be buying or should be selling. Because if you notice that for the past 2 months actually the price average has been upwards, you know very well that somehow we are still heading to the upper side. So the best you need to do is to look for buy positions. Keep looking for buys. We have this. We have this here. So this for the past 2 months we actually had one big candle. If you were to draw this on your screen, then you'll have something like this. You pick the opening, you pick the opening price, the closing price, the highest high that we've seen so far, which is here. This is the highest high, and then the lowest low that we've seen within those 2 months. So the entire 2 months, this is what we had. The price actually climbed massively to the upper side, and notice somehow for the past 1, 2, 3, 4, 5 months, price has been consolidating. There was no clear direction. So after breaking above like that, you now know that we are now heading to the upper. So you're supposed to keep looking for a buy after that. As it is now, this is the illustration. This is now actively we have price. It broke above everything. It went even massively higher, and somehow we are still to the upper side. So this is a bullish move, which means gold is still actively to the upper side. So this is one way you can, you don't have to, if you find a broker that gives you maybe 1 minute, 3 minutes, they're basically just calculating and then drawing for you. These candlesticks are basically numbers. Every individual second there has to be an account of the price, the current latest price. It's recorded somewhere, and you can find that here. It's always here. Tick window. Here, it's always recorded here. You can find. So the candles are drawn based on time. If we are opening, the current 5 minutes will draw. We'll mark that price. Like that, we continue drawing until the end of that candle. Then we pick the highest high within that. Maybe if it's 1 hour, within that 1 hour we pick the highest price, then the lowest price, the opening price, and then the closing price. Then we print a candle, the one you're seeing. So what is most important is that candles are basically just numbers. They are numbers. The things you see here, they're drawn based on numbers. What is most important are the numbers. If you have the numbers, you can draw even what has been happening in 1.5 hours, each 1.5 hours. You don't have to have like 1 hour only. Then if I'm looking at force, this is what I have. Assuming I was looking at the force chart, I would have something like this. I'll delete this, we don't use it, sorry. Then I go to force. So what force stand for? It's just the same thing. Force means what has been happening within a particular duration of time. So if from this period separated as this and this one, this and this one, this is what has been happening in the entire week. So if you want to see what happened previously from the force point of view, then this is how you know it. You will see it here. From this point to this point, this is what happened the previous week. We actually had price opening here. It went somehow low, continued up, came down, up, and then came and closed somewhere here. Currently, as we're speaking, the price gap down, pulled back up, went up to the highest close, the highest price we saw, like around the highest price that we had last week before heading to the upper side. So whatever you're seeing here is basically what has been happening in the previous week. If you're looking at the 4 hours, then the period separators here, these ones, stand for what has been happening in 1 week. And if you are looking at the daily, these period separators stand for what has been happening in 1 month. And if you are looking at this one, weekly, then the period separators stand for what has been happening in 1 year. Then if you are looking at maybe monthly, the same thing applies. So this is what has been happening in 1 year. What has been happening in 1 year? Actually, I want to color that out so we are able to see it properly. What has been happening? This is 1 year. Anytime you see, this is one thing that people assume, but it's really, really significant. You don't have to have a monthly chart to know exactly what has been happening in the previous year. You can actually draw that from the weekly. And you don't need to have a monthly chart. You can draw monthly chart from the weekly. That's another thing. So the period separators on the weekly, on the monthly, stands for what has been happening in the entire year. This one, the entire year. And then daily, the period separator stands for what has been happening in a month. So this means the previous month actually price spiked way beyond. It spiked massively upwards. And then if we are looking at 4 hours, then the same period separators which were standing for monthly, yearly, actually stands for just a week. This is 4 hours. So if this is what it means, this is what time frames mean. And the best way now, if you want to trade successfully, assuming I want to trade what is happening, I want to trade daily, I need to understand perfectly what happened on the previous week or what has been happening on the weekly basis. If you find that price keeps breaking above weekly highs, then that means we are still continuing upwards. Wait for retracements on the 4 hours and then pick a buy. So if you want to trade 4 hours correctly, look for weekly. If you realize that maybe weekly is showing you a break above levels, we are still continuing to the upper side, you better wait for retracements on a lesser time frame so that you can buy it at the lowest risk possible. Don't find yourself selling here, selling the 4 hours if you don't understand what's happening on the higher time frame. And don't find yourself selling if there is no uniformity. If monthly, weekly showing you a buy, but you're seeing a sell here, don't sell it. We have to be showing the same thing. We have to have the same direction. Monthly and weekly are almost the same. They are almost, because all of them, the period separators actually show you the same thing. They all talk about the year. Just that in this case, on the weekly, we divided the year in weeks, and then on here, on the monthly, it has been divided in terms of weeks, in months. So whoever wants to trade 4 hours here, you must understand what's happening on the daily, on the weekly, and even on the monthly. Try as much as possible to understand whatever is happening on these time frames before you finally sell it here. And the most important thing to understand is that the weekly, 4 hours, stands for the period separator, that you're seeing on the 4 hours, stands for what has been happening on the weekly basis. Every week, if we're looking at 4 hours, we have to draw them. This is what has been happening the previous week. This is another previous week, and this is another previous week, and this is the current week where we are now. So this means that this week alone, we've actually seen price rise tremendously to the upper side. So you could develop a strategy just based on this one. You may want to find out averagely what's the range, weekly range of this particular pair or this particular commodity. If you find the range very well, you know that price has gone above the range, or we are below the range, or we expect further move. Or you can even come up with a set that relates to volume, so that anytime you find that the price have done a particular volume in a week, or maybe above the daily volume or the weekly volume, then you know exactly what to do from that point. But as far as now, this is the most important thing, that the period separators stands for what has been happening in every week on the 4 hours. And if you're looking at the on the 1 hour, so the same thing applies. I can basically use this to draw what has been happening on the weekly chart, because this stands for a week. I can use this to come up with a weekly chart. I can draw a weekly candle here based on what's happening on the 4 hours, and that's what I want to do now. The highest price that we had last week was this. This is the highest high. The price basically went above here up to some point here. Then this, the lowest price was there, and then price opened here, there, and then it closed somewhere here. So I want to draw this in form of a candle. From the first, I want to draw in form of a candle to see if it's exactly what I'm saying, if it's true that this 4 hours stands for what has been happening on the weekly basis. So the first thing that I'm seeing there is that the price actually closed above. So if we opened here and closed above, that means this that week, last week was a green candle. Weekly we had a green candle. We have this there, and then we had this the lowest price, and then this the highest price. So this is what happened last week. If you're looking at 4 hours, then you are still able to come up with this. You're still able to come up with this pin bar. That means that if you're looking at the weekly 4 hours, you're able to see that the price actually went up to some point here. It came down up to this low, but ended up closing here. So we want to check if the same information is true on the weekly. Did you have a pin bar last week? Here. This is what happened last week. This is what happened. It was actually a pin bar, a green one. Last week was a pin bar and a green one, which means the price was supposed to head downwards, but somehow it spiked upwards earlier this week. So as far as now, the most important thing is that we are able to relate what's happening on the 4 hours to what's happening on the weekly. Then the next useful time frame is 1 hour. Delete this. This is the second. I create a template, a good template, so we are going to keep using that one. I don't need the default template we are using. So this is 1 hour. What 1 hour means, anytime you see 1 hour, the period separators in any 1 hour chart actually stands for what has been happening in every day. So each and every day, if you're looking at 1 hour, then this is what you're able to see. This is what happened yesterday. The candle opened here and then it closed there. Today it gapped up, went up, and then somehow we are still here. So on the 1 hour chart, each and every period separator, each and every day is represented. We have that. You can calculate to find the number of 1 hour that are there. We are here. Sorry, I don't like that appearance. So you can calculate 1, 2, 3, 4, 5, 6, 7, 8, 9, 11, 12, 13, 14, 15, 16, 17, 19, 20, 21, 22, 23, 24. So actually 24 should be here. That's just miscalculation. But 24 should be here. This is the closing day, closing candle. Then we open there. Price proceeds up. So if you want to understand what has been happening on a daily chart, you can actually look at the week and 1 hour chart. You'll be able to see that properly. And one thing that I should make clear here is that the period separators from 1 hour downwards actually stands for what has been happening in each and every day. So if I was to go here, this is still 1 day. This is still 1 day yesterday. This is still the same day. So if you have to draw a candle from a 30-minute, 15-minute chart, you'll come up with the same thing as somebody who is drawing a daily chart from the 5-15 minutes. The same. And even on 1 minute, the period separators always appear on the daily basis. So when you begin the day, another one appears, so that the whole day is represented in between the two dotted lines. These are the two dotted lines. This was the end of a day, and this was another end of a day. So this marks the end of a day and the beginning of another day. The end of a day and the beginning of another day. So if you want to draw a candle, assuming today you want to draw a 3-hour candle, which is not being given by MT4, the MT4 do not have a 3-hour candle. What you can do is simple. Just put 3 1-hour candles together. You'll be able to come up with a 3-hour candle. So you'll put it in a manner that every 3 hours, like you come here, and then assuming I want to represent this in form of one candle, pick the opening price, and then the highest price, then the closing price, and the lowest price. That's the only way you can come up with a 3-hour candle if the broker does not provide it. So if I want to represent this maybe in form of a candle, this one, this 3-hour candle, I want to represent it in form of a candle, one big candle. What I do is simple. Sorry, I want to use whatever is happening. Let's use what has happened already. I will basically just pick the opening price, which is there, of the first 1-hour candle there, and then also pick the highest price, which is there, and then pick also the closing price. Then I pick the lowest low, which is somewhere there. So overall, those arise price opened there, went as high as this, but came and closed somewhere. This is a green candle. So the 3-hour candle which I'm drawing is actually is a green big candle here, like this. So this idea may look like it's out, but it's really useful if you know exactly what you're doing, because somebody may ask you, or you may want to know exactly what's happening. While you're trading, you'll find that there are people who are actually doing 4-hour chart, maybe some are doing 6 hours, some are doing 8 hours. This is basically how they come up with those candles. They just put together a lesser time frame candles, then come up with the one that we are seeing. So this is how the candle looks. This is massively upwards. This is massively upwards. So if you have to do a 3-hour candle, that's what you do. You just put together lesser time frame. You'll be able to come up with the same candle on a higher time frame. So whoever is trading one hour, 30 minutes, 15 minutes, 5 minutes, 1 minute, they're actually looking at the same chart. They're doing the same thing. They're probably doing the same thing, just that they don't know they're doing the same thing. So you have to understand that properly, that candles, any candle that is higher, maybe if you have a 2 minutes candle, it's just a summation of what has been happening in the previous 2 minutes. So you need to understand also what this period separator stand for, what they stand for. If any time frame that is less than 1 hour, they stands for daily. If you move to here, this is now weekly. If you move here, this is monthly. If you move here, this is yearly, and this is yearly. So that's one thing. This information is very useful. So you will see there's a buy on the 1 hour, on the weekly. Wait for retracement on the 4 hours. There's a buy on the daily. Wait for retracements on the 1 hour, or 30 minutes, 15 minutes, 5 minutes, or 1 minute. That's the best way. And if you see an active buy on the monthly, then still wait for retracements here or here. Wait for very good retracements. If you expect us to continue upwards on the weekly, the retracements are looked at from the 4 hours. If you look at the daily, retracements are looked at from all these lesser time frames. So thank you very much. I hope that should bring us to the end of today's webinar. We meet again tomorrow at the same time.